What's up guys, welcome back to the YouTube channel. This is going to be a NASDAQ mini series that I'm doing for the YouTube. This is chapter 1 of a 3-part series. We're going to cover the long-term perspective, intermediate term perspective, and then a short-term perspective with a scalping model. So this is chapter 1 of 3, and we're going to be covering higher time frame analysis for index futures in this video. So what are we going to cover in this video? Premium and discount, internal and external range liquidity, higher time frame key levels, inducement for those higher time frame key levels, SMT, candle closures and how they can aid us with our bias, changes in the state of delivery when I actually flip to bullish or bearish on the higher time frame, and a stock confluence that adds probability to a higher time frame trend reversal or continuation on the NASDAQ. We're going to be going over a trade I called in the Discord group. So this higher time frame move that I called from here all the way up to here, and we gave out multiple entries there. I'm going to show you exactly how I called that move using this right here. And the step-by-step checklist that you guys have right here is what I use to call this, and that's what we're going to cover here in this video. Okay, so we are only going to look at 2 ways to frame a setup. Okay, we're going to be using internal and external range liquidity. Most of you guys should be familiar with this by now. If you're not, you can check out the video I have on YouTube about this. So the first type of trade we're going to be looking for on the higher time frame is trading from an old high or low. So buy stops or sell stops. And the second way is going to be from a high time frame key level, such as a FVG or OB, within a dealing range, premium and discount. So here's the example of playing out an internal range move, right? From a dealing range is low to high. We always want to be buying in a discount. So this would be an FVG or OB here. And we want to see SMT form around this key level. Now the SMT doesn't have to be exactly as it looks here with this low and this low. It could be with this low, or this low. You just want that SMT present, as well as other confluences, which I mentioned and we'll cover later in this video. But that SMT must be present to see distribution or accumulation from smart money on the higher time frame. Okay, here's the example from external range liquidity going below an old low. Then we want to see that SMT form somewhere around there. It could be here, it could be here. Bearish example, and I've drawn the SMT a little bit different to reiterate that it doesn't exactly have to be this here. So the SMT here in a premium, in a dealing range, FVG and or OB here, and then seeing a sell-off, and then a external range play here with the SMT. Okay, so the move, like I said, we're going to be covering is the move I called in the Discord, which was from here to the buy side liquidity here. This clean higher time frame play is exactly what we're going to be covering here, and all the confluences to why from here was I bullish, what happened to the chart prior to that that gave me the confidence here at this point that the market should trade up into the buy side liquidity here. So we want to see institutional sponsorship come into the market on the higher time frame. So what are the signatures of institutional sponsorship? Premium and discount, higher time frame key levels to trade off of, inducement for those high time frame key levels, SMT, and a change in the state of delivery, right? From bullish to bearish or bearish to bullish. Okay, so the first one here, premium and discount. Of course, we always want to be buying in a discount or shorting in a premium. So in this case, for the move I called, we were in a discount here of this dealing range low, from this low here to this high. This, everything below here is a discount, right? Next, what do we have here? Our high time frame key level. So we have a clear monthly fair value gap here in discount. So this was the key level that I anchored the longs off of from. Next thing you want to see is you want to see the market engineer some kind of low just before the high time frame key level, because they want to pair orders and they want to induce traders into buying here or having their stop if they were already long here, or to be triggered on a breakout short here. So you've got both buyers and sellers on the retail side induced here for the market makers to use this higher time frame key level here. You then want to see SMT. So as you can see here on the NASDAQ weekly chart, we have the NASDAQ trading down into the higher time frame key level, and down below this low into a small weekly fair value gap here with the order block as well. If we have a look at ES fails to do so. So we have that SMT, which leads us at this point, after being in discount, having a hard time frame key level inducement, and then seeing that SMT, it's very likely the market is going to push higher and smart money are distributing or accumulating long positions here. Now what confirms the SMT and the bullishness is a change in the state of delivery. Okay, so a change in the state of delivery is the down close candles, if we're bullish, that go into a high time frame key level and an old low. When we trade up above the lowest down close candles, it can be 2 or 3, or it could just be 1 like we have in this example here. When we trade above it on a closing basis, that's our change in the state of delivery, and that's when we flip to bullish, right? We don't just look for this anywhere with any framework and narrative. It's after all of this has occurred and then we see this, that is most likely a change in the state of delivery. And SMT and CSD, they confirm each other, right? So what confirms that the SMT that we had with the yes there was going to hold? It's the change in the state of delivery occurring after that. Then what we see is a wick below this candle here. So these are bullish signatures coming into the market. We're wicking below candles lows and we're closing above candles highs. Those are bullish signatures. Stock confluence, right? So what is the NASDAQ 100? The NASDAQ 100 is a composite of the top 100 performing tech-based stocks in the US. And why this is important, I'll explain right here, and how I use that understanding to call the move here, right? So we'll start off with a bearish example here. Okay, so what has been the highest performing stock on the NASDAQ 100? Okay, if you've been following along with that, it's clearly been Nvidia overperforming way past others. In fact, there was a time last year where ES and YM were dropping and NASDAQ just couldn't drop. It was just staying range bound but refused to follow with ES and YM. And the reason for that was Nvidia was pumping so hard, it was keeping the NASDAQ in a range, whereas ES and YM were dying. Okay, so what we can actually do is look at the top 3 highest performing stocks in the NASDAQ 100 and use SMT with the NASDAQ, right? So if you look at the highs here, when we dropped here earlier on this year, the NASDAQ failed to get above this high. Okay, if you look at ES and YM, there's no SMT here. But the NASDAQ is a composite of the top 100 tech stocks. And what you see here is Nvidia going above the high here. So you have the SMT with Nvidia and then a candle closure here, wicking above the candles and closing below here. Then you see the market sell off. So Nvidia's SMT here gave NASDAQ that extra confidence that it should sell off here. Now, when I called that move on the higher time frame for the Discord group, I was looking at this. So when NASDAQ traded down into this monthly key level, with all the other confluences of the inducement being in discount, having the SMT and the change in the state of delivery, I also looked at Nvidia, right? So if you look at this low here on the NASDAQ and this low here, now if you remember on ES, the SMT was all the way down here. However, if you look at Nvidia, you have this massive SMT, showing that there is heavy strength in the top performing stock on the NASDAQ 100. So when you get this, not just at any time randomly, this occurred as NASDAQ traded down into a higher time frame key level with the inducement, the stop run, the SMT and the change in the state of delivery. And then you get this confluence as well with Nvidia and the top performing NASDAQ stocks. That is a ATM machine for the higher time frame on the index futures. Okay, when you see all of that plus the stock confluence, seeing the market not move in the direction then is very, very unlikely. This is an ATM machine when you have it with the right narrative and context, which is what I've explained in today's video. This move right here, okay, on the higher time frame from here to here. Okay, now this is a higher time frame move, right, which I've explained all the different criteria that we need to check off before we can actually be bullish here, right? But now at the point that we're bullish here, how do we catch the intraday plays up to here? We've got to dissect the weekly range, and that is for chapter 2. So chapter 2 will be up next week, so you guys want to turn on your post notifications, and I'll have chapter 2 up for you guys next week, and we're going to cover the weekly range, and we're going to talk about how you can get into the candles here and analyze the weekly candles here. If you guys enjoyed the video, like and subscribe, turn on post notifications because I'll be uploading every week. Also, if you guys want to join the Discord group where me and Tom call the moves beforehand, that's in the description. I'll see you guys next week. Peace.